talk about the second chapter of our course, which is job order costing. In this chapter, we are going to attempt a question for you. It has the completing and selling jobs. So basically, we are producing a product and we are going to sell. So June Productions generated the following activity in Excel Chase Company's work in process inventory as follows. So they have provided us the information about the work in process. So if I have to just make a T account about our work in process inventory, I can see that they have provided us a June 1st, which is the beginning balance for this month. So our beginning balance is $26,000, and this is the beginning balance of the work in process inventory. And then we have used direct materials worth $38,000, and we have used a direct labor for this product is $42,000, and we have a manufacturing overhead for this job is $25,200. So that gives a total of, and let's calculate the total here. The total here is 26,000 plus 38,000, 42,000, and 25,200. So that gives us a total of $131,200. And they are saying that additionally, Excel Chases has completed two jobs, jobs 140 and 143, for 48 and 40,000 respectively. So we can put here job 142 and job 143. So this job is $48,000 and this job is $40,000. So these two jobs has produced $88,000 worth of and if you want to calculate the ending part of this balance of the work in process, we can take 131,200 and minus 88,000, and it will give us 43,200 is the ending balance of work in process inventory. So what they are asking us to calculate, the first requirement is prepare the journal entry for production completed in June. So we are in work in process. In the previous video, I have explained to you that there are three inventory accounts that we use. One is called material, one is called work in process, and the third is called finished goods. So basically what we are doing when we are completing this job, are we sending these jobs to finished goods? So basically we are debiting the finished goods. So we can say debit finished goods or FG, and we can bracket, we can put job 142 and job 143 for a total of $88,000. Now what we're going to credit? We're going to credit work in process inventory for $88,000. So what we need to learn here is that these are two inventory accounts. One inventory account, work in process, is going down, and another working process account is going up. Why? Because we are transferring the finished goods from work in process to finished good. So that would be the answer for the requirement number one. Now the requirement number 2, I have already solved it over here, but for your for explanation, I will do it over here as well. So it's work in process. We have a beginning balance of $26,000. We add the direct material to complete this job of $38,000, and we add the direct labor of $42,000, and then we have an overhead that we incur to complete this job. So the total amount we have invested here is $131,200. We have completed 2 jobs, job 142 and job 143. One for job 142 for $48,000, and this one for $40,000. So these 2 jobs are equal to $88,000. So that leaves us a balance over here of $43,200. That would be the ending balance of this. So these jobs are going to finished good inventory. So the finished good inventory is getting increased, and this is getting decreased, and both are asset. So when an asset is increased, so we are putting job 142, job 143 is 48,000 and 40,000. So when we are increasing, we are debiting it. So we are debiting on this side and crediting on this side because this is a decreased here. So this is our second part of this problem. And then the third part is asking, prepare journal entry to record the sale on account. Remember what is the sale on account means? Means you're selling on credit, you are not receiving a cash, and your account receivable is going up for $63,000. So that is our sales. Also prepare the journal entry for cost of goods sold for job 143. So what we're going to do, we're going to say number 3, sales, we're going to say debit account receivable because we are selling on account, and we can put job 143 for $63,000. Means customer is going to pay us later, and we're going to say sales revenue for job 143 for $63,000. So what we are going to do here is, when we are recording cost of goods sold, we're going to say debit cost of goods sold for job 143 is $40,000. So we're going to say $40,000, and we're going to credit work in process inventory for $40,000. So that's our part 3. Anytime when an inventory is sold, it becomes cost of goods sold. So I'm going to put a note here. When inventory is sold, it becomes cost of goods sold. Okay, and of course the inventory is sold, and this is the cost of goods sold of $40,000. The fourth point that is asking over here is, what is the gross profit? You know the formula of gross profit is sales minus cost of goods sold is equal to gross profit. We know that the sales is 63,000. We know the cost of goods sold is 40,000. So our gross profit is going to be 13,000 in this scenario. Okay. If you have any question on this problem, please feel free to send me an email. I would be happy to answer your question. Thank you.